The Inflation Reduction Act was signed into law on August 16, 2022, and it affects U.S. tax law in several ways. The new law creates two new taxes, a 1% excise tax on stock buybacks, and an alternative minimum tax on corporations that's based on 15% of their adjusted financial statement income. The new law extends the Section 461 excess business loss limitations for non-corporate taxpayers through 2028. It extends two provisions of the premium tax credit for 3 years to help people purchase insurance under the Affordable Care Act. It expands and modifies multiple tax credits related to energy production and energy efficiency for homes and vehicles. And it provides close to $80 billion in funding for the IRS. That's a lot of info. So in this video, I'm just going to focus on the two new taxes and the funding for the IRS. Let's start with the tax on stock buybacks. The Inflation Reduction Act creates a new section of the tax code, Section 4501, to levy an excise tax on stock repurchases by publicly traded domestic corporations. The tax, which becomes effective in 2023, is calculated as 1% of the fair market value of any shares repurchased. Thus, if Walmart were to pay $5 billion to repurchase its own shares, it would incur an excise tax of $50 million. Note that this tax does not apply to foreign corporations or private companies. Next, let's discuss the Alternative Minimum Tax, or AMT for short. The Tax Cuts and Jobs Act repealed the AMT for corporations for tax years after 2017. But the Inflation Reduction Act amends Section 55 of the tax code to bring back the AMT for corporations for tax years beginning after December 31st, 2022. Thus, a corporation will now need to compute its regular tax liability and its AMT. If the regular tax liability is higher, the corporation will pay the regular tax. But if the AMT is higher, the corporation will pay the AMT. Now, the Inflation Reduction Act doesn't just bring back the AMT, it also makes a major change to the way the AMT is calculated. The AMT will now be calculated as the excess of 15% of adjusted financial statement income over the corporate AMT foreign tax credit. So what is adjusted financial statement income? It's the company's net income from its GAAP-based financial statements with certain adjustments. This is a major difference from the old AMT, as the AMT is now being calculated using the company's book income instead of a modified taxable income approach. But remember, book income is just a starting point, as there's several adjustments to be made. For example, corporations can use bonus and accelerated depreciation when calculating adjusted financial statement income. Thus, let's say a company reports net income of $1 billion. The company reports $300 million of depreciation for book purposes and $400 million of depreciation for tax purposes. Thus, the company can subtract that extra $100 million when determining its adjusted financial statement income. And if that was the company's only adjustment, the company's adjusted financial statement income for that tax year would be $900 million. Now, depreciation is not the only adjustment. Financial statement losses from prior years can be carried forward to reduce adjusted financial statement income by as much as 80%. And corporations can also use general business credits like the R&D credit or investment tax credits to offset part of the tax. And if the company does end up paying the AMT, it can then claim a credit that can be used to offset its regular tax liability in future years if the regular tax liability happens to be larger than the tax per the AMT. Now, the AMT does not apply to all corporations. It only applies to domestic corporations that have an adjusted financial statement income of an average of at least $1 billion for 3 consecutive tax years starting after December 31st, 2022, and foreign corporations with an average U.S. income of at least $100 million. The AMT does not apply to S corporations, regulated investment companies, or real estate investment trusts. The AMT also doesn't apply if the company has a change in ownership, although the Inflation Reduction Act doesn't say what that means. If the corporation has a set number of consecutive years, to be determined by the Secretary of the Treasury, in which it doesn't meet the financial statement income test, or if the Secretary of Treasury simply determines that it's not appropriate to apply the AMT to that specific corporation. Finally, let's discuss the IRS funding. The Inflation Reduction Act provides the IRS with close to $80 billion. More than half of those funds are for enforcement, which includes collecting taxes, conducting criminal investigations, and digital asset monitoring. $25 billion is for operation support, which includes things like rent, facility services, and security. A little under $5 billion is for business systems modernization, which includes better callback technology to provide taxpayers with more personalized customer service. $3 billion is for taxpayer services like tax filing assistance and education. And about $750 million is going toward non-IRS administrative costs. This includes costs incurred by the U.S. Tax Court and the Treasury Department, as well as costs of a task force to develop an IRS-run, free, direct e-file tax return system. Now, the IRS is going to get this $80 billion over a period of years, but it's in addition to the IRS regular annual budget, which in 2021 was $13.7 billion. Now, with $80 billion going to the IRS, taxpayers are understandably concerned about an increase in audits. But the Treasury Department claims that audit rates won't increase for taxpayers who make less than $400,000 a year. It says the increased funding will be used to focus on high-income taxpayers who use sophisticated methods to underpay their taxes. I hope you found this video helpful. If you'd like to learn more, I put a link to the full text of the Inflation Reduction Act in the description section below. I've also updated my tax guides to include information about the Inflation Reduction Act. If you'd like to receive those PDF guides, you can sign up for my email list or become a supporter on Patreon.